Hello there, welcome to this edition of Global Business Africa. In the next half hour, we'll make a speed run through all the key business news stories making the headlines right across the continent, from Johannesburg, Nairobi, Lagos, and elsewhere around the world. You're watching Global Business Africa. I'm Raman Yang, here's what's coming up. Egypt amends its budget in order to portray a pro-poor stance, but how will it be financed? The South African government wades into a biting water shortage in Gauteng. And we'll have an in-depth look at the factors that are taking the toll on Africa's tourism sector. Let's start in Egypt. President Abdel Fattah el-Sisi's government has announced amendments to the 2014-2015 state budget to spend more on poverty alleviation programs. Now, unemployment and poverty levels in the North African state have soared in the last 3 years, fueled by a combination of the political instability we've seen since 2011 and the economic chaos as well. From Cairo, Yasser Kim starts us off tonight with a look at the changes in the numbers.
There are changes in the budget. The government said it increased expenditure on social services. For instance, health and education are up by 10%. Funds for developing shantytowns and poor villages will receive an extra 10%, while new roads and underground lines will be constructed. Overall expenses now have increased by $6.4 billion to reach $109.5 billion.
A set of austerity measures were adopted recently. Their aim was to cut expenses. The money saved will not be put aside. It will go into the budget as more services to the poor and the needy.
Austerity measures included reducing subsidies, raising taxes and energy prices to balance the books. Meanwhile, Minister of Finance Hani Doumbia said a simplified copy of the budget will be distributed to citizens. He claims it will be written in a simpler way for people to understand and review the state finances. A simplified version of the state budget should be distributed to the public this week, but we managed to get hold of a copy of it. Now, it looks reasonable and clear for an expert, but is it the same for a normal person? We showed it to a number of citizens in the streets. The results were expected.
I don't understand anything in this paper. Strange, because I'm studying economics.
It's full of numbers, so complicated. What's important for me is not this paper, but that we experience improvement in our lives.
Without the complex numbers and jargons of a state budget, it is quite clear for most Egyptians that there's still a lot of work to be done for the economy to improve. Yasser Hakim for CCTV, Cairo.
And Yasser Kim joins us now with the latest details from the Egyptian capital. Yasser, how have economists and analysts reacted to the changes proposed in Egypt's budget?
Well, they reacted positively, mainly because Egyptians have been suffering for the past 3 years. There are a surge in unemployment rates in all forms. Poverty is higher now. And so austerity measures at this time in particular, the austerity measures of the last couple of months, would be even more harsh on the people. So against that, there has to be some kind of measures that would lift the burden, social services and better living conditions. And this is what the government is doing. It's looking more on the social side, not just on the numbers in the budget.
Indeed, as I understand it, there's an extra $6.4 billion in planned spending that comes about as a result of these changes. How will that extra cash be funded?
It will be funded from the budget itself, but what's happening is that the government, from the new economic reform program, has managed to save some money by reducing subsidies, so reducing expenditure, by raising prices of energy, especially for heavy industry, raising the prices of electricity and obviously of fuel. And all this, plus money coming from the Gulf, in the past couple of months, has managed to raise, to put on the side, if you may say, the $6.4 billion to use for social means and social services projects.
Indeed. Finally, if we may divert here a bit, central bank data out on Thursday indicated that tourism revenues for the 2013-2014 fiscal year was down 48% to about $5 billion or so compared to the previous year. What's tourist traffic been like ever since June to this particular point in time in September?
Well, it's improved a bit, maybe by 10% than last year, not like 2010 or 2011, but it's not good enough. The main problem is that there was a travel ban on Egypt, and it was just lifted last month from many European and Asian countries and the US. Now that it's lifted, the forecast is much better than maybe in the next season, which is most probably will be the Christmas, New Year, and the winter season when Egypt is actually sunny and the beaches are fine. There will be a higher rate of tourism. But what has made up for that is actually the local tourism in the past couple of months, especially to Hurghada, Sharm el-Sheikh and Luxor. The occupancy rates in Hurghada and Sharm el-Sheikh in the Red Sea reached 80% and even 100% during the summer vacation and the Eid festivities. So that made up a bit from the international tourists that have not been coming. But if we're talking about international tourism, it could be revived maybe by November and December.
Indeed. We'll have to leave it there. Thank you for the update. That's Yasser Kim there live in Cairo. Now, let's fast forward to 2016, 2 years into the future, and that's when you might be able to get your hands on the first set of climate change bonds issued by African countries. Now, these fixed income instruments are designed to enable the world's poorest continent to tap both capital markets and donor funds so that countries over here can bolster their defenses against extreme weather events like prolonged drought, for example. Now, the plan was unveiled on the sidelines of the UN Climate Summit in New York this week. It will see an initial issue of about $200 or so million with a fixed term of about 5 years. If those initial bonds are successful, you should expect to see more every 5 years for at least a period of 3 decades, with the potential to create a secondary market for those instruments. Now, the bonds are being developed and they will be issued by African Risk Capacities, an AU agency created with a mandate to improve African states' ability to plan, prepare for and respond to natural disasters and climate change too. Payouts for disasters will be tied to extreme climate indices. Those, however, are still under development. Now then, let's stay with this climate change theme for a moment. It's been an issue for us this particular week. The consensus has always been that Africa contributes the least amount of greenhouse gas emissions around the world, whatever it is you want to talk about, CFCs, carbon dioxide, the lot. But the bulk of the fallout, floods, drought, famine, is right here in Africa. Climate discussions took center stage at the UN General Assembly this week, and we asked you, our global audience, if you think the world under the UN is united in averting global warming and helping to improve the situation here in Africa. Here's a quick run through some of your responses. Emmanuel A. Arimo, you said that Africans ought to start taking responsibilities for themselves and to solve their own problems instead of having to wait for others to solve their problems all the time. Katungi Timothy Apoli, you said not at all. The UN is just composed of utter opportunists on economic missions. On the other hand, in Dalakachu Ghetto, you argue that I don't think so, because they always insist on our resources being bought up by their large enterprises. If we want healthy economic growth, Africans have to be ready to avoid these problems by being united. Now, across the board on Twitter, Kamal503, you argue that developing countries, or rather developed countries, have not helped African countries, but they are part of the problem themselves. And of course, the Kenyan head of state, the official handle of the Kenyan head of state, Uhuru Kenyatta, tweeted, quote, "We need to turn the challenges of climate change into investment opportunities for the present and future generations as well." Now, once again, Zimbabwe's head of state has demanded the removal of what he described as unilateral and illegal sanctions imposed on the Southern African country by the United States and the EU. That was part of his speech at the UN General Assembly meeting earlier this week.
Once again call for their immediate and unconditional removal. We are a peaceful and a peace-loving nation, ready to engage in constructive dialogue for mutually beneficial relations. We call on those who continue to harbor ill will against us to cast away their hegemony-driven hostility as we appeal to them to review their hard and cruel positions and open a new chapter in their relations with us based on mutual respect and friendly cooperation.
Let's move on to South Africa, where water crisis has hit parts of Gauteng. The water shortage has caught the attention of the Minister of Water and Sanitation. She visited the Rand Water Control Room in the south of Johannesburg to get an update on the situation. Now, earlier this week, Rand Water, the bulk water supply to most parts of Gauteng, was quick to announce that they had the 10-day-long water shortage under control. This utility, remember, provides 4,000 megalitres of water a day to Gauteng.
The crisis was caused by electricity cable theft, power cuts, and then early on Monday morning, a brand new backup generator or transformer failed to function. It left many reservoirs near empty around Johannesburg, Ekurhuleni and parts of Pretoria, which meant that large parts of Johannesburg, Pretoria and Rustenburg were affected. The minister says the worst is over and she has pulled together a team to build an integrated action plan to avoid a recurrence. They did learn another valuable lesson though.
I think the interventions have helped such that no community has run out of water for 24 hours. Not at all. Alternative interventions were brought. What we had to improve was communication with our residents.
Rand Water's Chief Operating Officer has made a promise to those affected by the water shortage, which he says he will do his best to deliver.
I think if all else remain the same, if we don't have any interruptions, if there's no power supply that is lost, we will be able to meet that deadline of 2 weeks. I mean, in that 2 weeks, in some of the areas might still start receiving water. So I think by 2 weeks we're talking about completely eradicating the challenge.
Whether or not everyone who has been affected by the water shortage gets their water within the 2-week deadline remains to be seen. However, all the eyes are on that team of people who have been appointed to make sure that any water shortages are kept to a minimum. I'm Angelo Coppola for CCTV in Johannesburg.
Quick run through the markets before the break here for you. Egypt, of course, wasn't trading today, but remember this particular market, at least the EGX 30 index, is up about 40% or so in the year to date. Those are numbers that none of the other indices over there, Nairobi, Johannesburg, even Nigeria, can think of. When we come back, we'll have an in-depth look at the factors that are taking the toll on Africa's tourism sector right across the eastern and southern seaboards. All that and more coming up. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening. Welcome back. 13 minutes in, you're still watching Global Business Africa. Tourist traffic to Kenya is down about 52% so far in 2014 compared to a similar period last year. Now, concerns about insecurity, of course, are hammering the sector right across the board. Several Western nations have issued travel advisories, and that cripples the sector, which gets over 50% of its traffic from Western Europe and North America. CCTV's Carol Loyola reports on the situation in Mombasa, a city that's now home to several empty hotels.
This is the situation at the Kenyan coast. Empty beaches and closed down hotels. Insecurity has caused a decline in tourist numbers.
We find out that there's so many Africans on the beach side, more than the Europeans who were there before, maybe 6 months ago. So I think because of terrorism attacks and stuff, we have lost so many tourists.
Kenya's tourist arrivals in the second quarter of this year declined significantly as travel advisories take a toll on the sector. The East African nation received 172,000 tourists through Jomo Kenyatta and Moi International Airports in Nairobi and Mombasa respectively, down from 248,000 during a similar period last year, according to new data from the Kenya Tourism Board.
Right now, you can say on a daily basis, hardly 4 to 5 international tourists comes to this hotel.
The government recently allocated $10 million to revive the industry, and a global public relations and branding campaign has been identified as the best way to revive the sector. Social media is being used to pass the message across to markets in Europe and the US, and it seems to be working for some.
It is not as bad as they show on the news that people are being sent back or anything. I mean, people still carry on with their lives. Accidents do happen in every country, but it just depends on how seriously you take them.
I believe the perception of Kenya being a dangerous place is incorrect. Everywhere in the world there's possibilities of a terrorist incursion or attack, and I don't believe that Kenya is a dangerous area to come in.
Authorities say the coast region is safe. There are numerous police roadblocks as you enter the city of Mombasa.
The process of rebuilding confidence in the industry is actually what I've called it, a process, and it's not an overnight thing. When people run away because of certain things like insecurity, bringing them back really calls for hard work.
Kenya's government says it is negotiating with Western nations a traditional tourist market so that they can revise their travel advisories. Carol Oyola, CCTV.
Right then, let's get a more in-depth look at what's going on in the tourism sector right across Eastern and Southern Africa. Estelle Verdier-Watine is the Managing Director of Javago.com. It's an online hotel and safari booking platform. She's live with me in studio right now. Thank you for your time. Based on your network, you've got about 9,000 plus hotels that use your platform. What's traffic like across Africa right now?
So right now we of course see like a decrease of bookings due to Ebola. This has really a big impact in Africa, and I'm very sad to see that due to this misconception people have about Africa. They think that Africa is one. They think that coming to East Africa is dangerous because of Ebola. But I mean, Africa is diverse and Africa is big. And where we are here in Kenya or in Tanzania and Uganda, Ebola is very far. And I think people should still be coming here to discover all these fantastic places. And we, with our website, what we try to do, we try to make it very easy for people to book their holiday. They can see many different accommodation options. They see that it's not necessarily very expensive to come to Africa, and they get a chance to see the diversity of Africa.
But most of your hotels are in Eastern and Southern Africa, aside from Nigeria and Ghana, I believe.
Yeah, we also have hotels in Mali. Actually, we are covering 20 countries in Africa, so we have quite a broad presence. But from the East African office, we are managing 14 countries. In
Eastern and Southern Africa. Speaking of East Africa, however, there was a bit of concern among sector players here that the fact that Kenya raised taxes, especially VAT, last year in September, that we might see traffic being diverted from Kenya going down south to Tanzania. You have a presence in both countries. Have you seen any such diversion taking place?
We don't really see a diversion. I think people who are going to Tanzania are not necessarily the same people who would go to Kenya. I think once again, East Africa is very diverse, and the different countries are appealing to different population.
Really?
So,
why?
Yeah.
What's the difference between the typical Tanzania visitor and the typical Kenya visitor?
If you look at the budget of a safari, in Tanzania it's much more expensive, in terms of transport, but also accommodation. It's much more expensive than Kenya. So I think the two countries are kind of complementary. They are not competing against each other. And I think if each country really take advantage of that diversity to promote themselves, then they won't be affected by any of these situations.
You're moving into Southern Africa as well, starting with Zimbabwe, which I found a fairly interesting country to use as your platform. Why Zimbabwe? Why not the more mature market that is South Africa?
I think we can add much more value in Zimbabwe than in South Africa. Today, if you want to travel to South Africa, it's quite easy. There are thousands of hotels online. It's easy for you to find a 5-star hotel or a 2-star hotel. But in Zimbabwe, people have no idea how to go there, where to sleep, and we are making it easy for them to find the perfect accommodation.
So your strategy, as I understand it, is essentially to move into these green markets, these destinations that are actually brilliant in and of themselves, but not many people know about them online.
Yeah, exactly. The idea is to shed light on all these fantastic destinations which are unknown to so many people in the world. And I think each government in these countries, in these African countries, can really benefit from the true value of their environment.
All right, we'll have to leave it there. Thank you so much for your time this evening.
Thanks a lot.
Appreciate it. Right, so let's move on now to a question of aviation. The new version of Airbus's most popular single-aisle passenger jet has taken to the skies above Toulouse for its maiden voyage. It's not just a plane that's aiming high, however. Airbus has raised its 20-year forecast thanks to growth in emerging markets. China is now poised to replace North America as the world's largest single domestic aviation market within a decade. Airbus expects passenger air travel to rise by 4% and 4.5% in that time. A strong demand for more fuel-efficient short-haul aircraft rises. Now, Airbus and its rival Boeing, they're both accelerating production in a bid to win new orders. Overall, Airbus expects to deliver about 22,000 single-aisle jets in the next 20 years. That's 9% more than previously forecast, with Africa contributing a significant chunk to that number.
These engines are large, and they are much larger than the engine we had in the past. So, in terms of integration, that was a challenge for the engineering teams to make this integration optimized in terms of aero, so as to optimize the performance of the airplane.
Quick run through commodity prices here for you. The trends we've covered before on the program are still very much intact. You're seeing a lot more supply coming to the market from Nigeria, from Libya. There's a lot of saturation on the supply side, but demand just isn't keeping up. That's essentially depressing oil prices altogether. Gold also falling down to about $1,200 or so dollars an ounce, and that trend has held pretty much intact since the start of the year. Speaking of online trade, we'll be looking at hydroponics farmer in a bit more detail when we come back a little later.
BizAsia. Asia means business.
Welcome back. You're still watching Global Business Africa. Let's talk about hydroponics, the science of growing plants without soil. It's relatively recent in Kenya and it needs an energy-intensive climate traditionally to work well. However, recent developments now allow farmers to practice hydroponics in fairly simple off-grid sheds. CCTV's Carol Loyola spoke to Peter Chege. He's one of the first hydroponic farmers in Kenya.
Peter Chege tends to his plants in his farm on the outskirts of the Kenyan capital, Nairobi. He's adopted a new way of farming, growing plants without soil. The plants are grown in water using mineral nutrient solutions. The concept, originally from Australia, has taken a new twist with Chege.
The systems are very expensive there because of the temperature control. So what I did research on how I can make a system without which cannot use electricity to cool the whole system, so that at least the cost of the unit becomes very cheap.
Hydroponics technology has numerous advantages. It allows plants to grow with 80% less water. It doesn't require lots of land as compared to conventional farming, and there is fast growth and maturity of plants or fodder. It also produces an increase in yield and elimination of soil-borne diseases. There is an increase in harvesting period and minimal use of fertilizer.
I don't foresee any other good idea because this hydroponics is going to rescue agriculture in Africa because it's tackling those problems like water, land, and also diseases control. So, but also needs training. That's why we encourage farmers to come for training. We train them, and then after that we go and install the units.
Chege received funding support from the Kenya Climate Innovation Center, and now he's making profits of up to $10,000 a month. He's also moved his business a notch higher. He now builds hydroponic systems for interested farmers.
It has really helped us because we have been able to install about 400 units in Kenya and also 20 units in Uganda. Yeah, but a lot of money was spent on research than even the capital which we used to start the technology.
Food security is a major challenge for most African nations, yet agriculture is a backbone of these economies. But with technologies like hydroponics, there is hope of food availability all year round. Carol Oyola, CCTV, Kiambu County, Kenya.
Quick run through the currencies here for you. The rand is having an absolutely torrid time, partly because the American dollar has been fairly strong. But the rand, of course, is under quite a bit of strong selling pressure. 1126.05 was the low that it hit today. It's close to essentially 8-month low. Last time it was this week was around February this year. We'll keep tabs on this currency and plenty more in future for you. But that's it for this edition of Global Business. Do remember you can send your feedback on the program to globalbusinessafrica@cctv.com. Check us out online as well. Facebook, Twitter, YouTube, you name it. If you're there, so are we. If you missed anything, you can catch up online over there. Thank you for watching. I'm Raman.